where China and Saudi Arabia and every other country, as you mentioned, in the Southern Hemisphere that holds our treasuries, well, they're thinking, well, what the hell? Do we want to continue to hold these treasuries that can be confiscated and given to the country that they're in a war against? I mean, it's as stupid gets, really. It's not our prerogative. The world views us as being completely hypocritical. The mainstream media wants us to believe that it's China thinking the price is too high, so that they've stopped buying gold. And I look at this as one of the silliest premature conclusions I've ever seen. First of all, no one has ever believed the numbers that China puts out. That's always been the conventional wisdom that, they tell us they have 24, 25, 2,600 metric tons. Alistair McLeod believes they have 38,000 metric tons, over 5 times what we supposedly have at Fort Knox, which of course hasn't been audited since 1956. But it was always, you can never believe what they have, always. And you get this one report that shows that they've ceased buying for 1 month out of the last 20. And now all of a sudden, the price is too high. The bull market's over. China's not buying anymore. I think it's crazy. I think it's foolish. And not only has China been buying for forever and not updating their numbers very frequently, we have no idea how much they own. They're also the largest producers in the world. And they've been producing at uneconomical price levels using our trade imbalance forever. So no, this is what this was a massive short position on COMEX, where the commercial banks were literally as extended as I've ever seen them. And so one would expect that there would be some sort of a pullback, hoodwinking the managed money into taking the other side of the trade. And, it's still well above its 200-day moving average. So there's still a little bit of room for it to correct. But no, this is not the end of a bull market. It is a correction within a market where, if you've been at this long enough, this is just part and parcel what to expect. But it's becoming far harder to do that in an environment where we're seeing such copious amounts of deliveries off of the exchanges. And 3-4 Fridays ago, we saw $500 million worth of gold bars be delivered to Brinks, Hong Kong, which many people believe is then trucked over to the Shanghai Gold Exchange and sold out because they purchase kilo bars, the mini contracts. So that's what the Shanghai Exchange trades. But you're seeing bleed downs in the COMEX and the LBMA, and also on the Shanghai Exchange. You're seeing countries like India bought 1.5 times the amount of gold in the first quarter of this year than they bought all of last year, and they just brought back 100 metric tons from the Bank of England, removing the counterparty risk. We see Saudi Arabia and Egypt and 6 African countries bring all their gold back from the New York Fed. We are seeing central banks buy at levels like Turkey that the world has never seen. In fact, the amount of gold that the central banks hold is as much as just before Nixon closed the gold window. It's almost as if they are preparing for some form of a gold standard. So no, this is not the end of any gold bull market. What it is, it's more of the same thing, the stupidity of manipulating and rehypothecating both LBMA and COMEX contracts to drive the price down to maybe buy themselves some more time, or to help cover their short positions that are growing very tenuous and bleeding them dry, them being the big bullion banks. So yeah, I think this is just a correction amidst a primary bull market. And it won't be an easy run. It will be volatile. The bull wants to throw as many people off its back as possible. So have strong fingertips. Look at this as a subsidy, the way that the central banks do. And so no, this is nothing other than normal correction within a volatile bull market, precious metals, which typically are far more volatile than the other markets that we would normally talk about, where we can make these rules and the rules don't apply to us. We can invade Iraq under the guise of weapons of mass destruction, not find any, destroy their country, topple their regime, put in a new government, and we're still there 20 years later, sanctioning 14 of their banks and controlling their natural resource revenue. 90 billion they made last year. I talk about this all the time. They asked us for $1 billion of the 90. We said, come back to us in a few months. Not a good time right now. So, they're in the process of kicking the coalition forces out of the country. They made trading in dollars illegal. As you know, if you own a business, you'll go to jail. They don't have green bills in the country anymore. All the banks got rid of them as of January 1, and they officially applied to BRICS. The world looks at us as being hypocritical. We can do this stuff. we can give the Ukraine 200 billion, and to your point here, the G7 is going to make them a loan for another 50 billion backed on as collateral, the Russian frozen assets, with no congressional oversight, and that's okay. But as Janet Yellen said to CNBC 2 weeks ago, China, we're okay with you being friends with Russia, but you give 1 penny to the war machine, and we will sanction your companies, your banks, and Beijing itself. The hypocrisy that the world looks at us and then these types of stupidity laden decisions, you can't make up. And what else would we expect then for MBS, the Crown Prince of Saudi Arabia, has just turned down an invitation to attend the G7 meeting. That's interesting. So when you talk about the ramifications of making these stupid moves, yeah, they're real. And it just incentivizes the de-dollarization, the de-treasurization, and it's coming from a country that's bankrupt. You know, we are accumulating, as people who watch your show know by now, $1 trillion of debt every 100 days. We're bankrupt, we're insolvent, we're viewed as hypocritical. We go around the world making these declarations, these sanctions, and now these confiscations, which will only shatter the trust that this country has built over however many hundreds of years to be, you know, the beacon of justice and free markets and liberty and doing the right thing. And yet it just seems as though we continue to make boneheaded blunders, this being one of them. It is not our prerogative to say this. It is not our prerogative to steal this stealing, all right? This isn't just freezing. This is stealing another country's reserves. And what makes it exponentially more disgusting is using the proceeds to fund a war that the country they stole from is fighting. It's not right. And it's not our position to do this. And I'm not making any statement on war, who's right or who's wrong, but as the world reserve currency, you should be neutral, and you should not be in the business of saying you can use it and you can't, especially when the rules don't seem to apply to us. We had talked about Enbridge maybe 2 years ago when it first came out, 1.5 years, 2 years ago, and it's a coalition or collaboration, I should say, between the central banks of China, Hong Kong, Thailand, and the UAE. And I find it interesting, first and foremost, that what it is, it's a cross-border digital payment system that allows these countries to trade their local digital currencies with one another outside of the SWIFT system. So there's no SWIFT interference. And the first 2 test trades were done at the end of last year, 2023. The first one was using yuan, and I think it was with the UAE, digital yuan, to buy oil. It was a cross-border oil purchase. The second one was a cross-border gold purchase. Now, if you ask me, commodities like gold and oil have been remonetized across the globe. They have become more valuable than the currencies that are purchasing them. This is Zoltan Pozar's Bretton Woods 3, where commodities rule the day. And I find it interesting that that is the case. Now, I thought it was a big deal when it came out, and I talked a lot about it when it first came out, because this is a way for them to sidestep the sanctions. The sanctions are largely SWIFT related, right? So there was an article that just came out last week, June 5th. Saudi Arabia has joined a China-dominated central bank digital currency cross-border trial in what would be another step towards less of the world's oil trade being done in US dollars. The move announced by the BIS on Wednesday will see Saudi Arabia's central bank become a full participation of Project Enbridge, a full participant of Project Enbridge. And so, you know, look, they decided to not go to the G7 meeting. They're now a full participant in the Project Enbridge. We already know about the BRICS. We know about the Shanghai Cooperation Organization. All of the OPEC countries are on the Belt Road. You can see this stuff is starting to take shape. And I thought James Rickards had a very interesting take recently on why they haven't issued their common settlement currency. And I have to agree with it. And intuitively, this is what we've really said for a long time. But the way he explained it, I think, is worth just noting here. And that he said, look, you know, there's 10 countries now, the 5 original plus Saudi Arabia, Iran, Egypt, Ethiopia, and Egypt. And so if they had a common settlement currency, even if it were pegged to gold or whatever, selling or buying from one of the 10 members with the common settlement currency, you know, with the proceeds, you would want to use it to buy something. So you only have 9 other countries to shop with. Well, there was just a meeting that happened, as we've talked about on this show ad nauseum. There were going to be 200 meetings between the beginning of the year and the big BRICS meeting in October. And they just came out with a report here of a meeting that happened it's called NIZHNY, Nizhny Novgorod. And there was a meeting that just came out, and there were 54-point summation article that I read, and I'm just going to highlight a couple of them here. One is that this was just a couple days ago. 21,000 people attended from 139 nations. 78,000 in bilateral deals were signed on the sidelines, meaning I'm going to trade with my local currency and your local currency. We won't use the dollar, and most of these deals are now not putting their reserves, the excess, into treasuries. They're putting them into gold. But the third one is the big one, and that is 59 nations plan to join BRICS. This just came out of this meeting the other day. And so if you have 59 countries to trade with in common settlement, you can go shopping in 59 countries instead of 10. When they get this critical mass, a large enough group of countries that are now approaching, you add 59 countries on here, you bring in the Shanghai Cooperation and the Eurasian Economic Union, which you keep hearing about, it will happen. And then look at the Belt Road Initiative. You're talking 90% of human population. And so when you have more and more and more countries signing on to the BRICS, 59 countries have planned to join, you have the ability to issue a common settlement currency. It doesn't have to be a reserve currency. That's where gold can come in. Gold has outpaced the bond market since the beginning of the century, handily, many times over, but it lacks the counterparty risk that we find in treasuries that, as of today, can now be confiscated. The EU plans on taking the interest from the frozen assets in the European Union and using those to act as collateral and whatnot, and towards giving a $50 million loan to the Ukraine using frozen assets. They're stealing another country's assets. It's wrong, and it's going to have ramifications. And this is what is incentivizing the coalition of all of these countries to move away from the hypocrisy, the hegemony, and the threat of confiscation of assets or sanctioning of assets at the worst, the least, if we do not align ideologically with those countries. And it's about as foolhardy as one could get. And the M Bridge is just another way for them to continue to de-dollarize and to do transactions that can't be sanctioned and can't be attacked by the SWIFT, to do transactions that give them the ability to maneuver outside of the SWIFT channels.